Good morning. It's Monday, April 29th, about 6 a.m. Central Time. Overnight, the precious metals are higher after last week concluded with the release of the Federal Reserve's preferred inflation gauge, known as PCE, which continues to show stubbornly high inflation. Economists called for 2.66%, while the headline number came out at 2.8% in March. The two-year Treasury yield, which everyone should be watching, reached 4.99%. Now, this morning's trade a little bit softer, down about 1/10 of a basis point. The 10-year yield reached 4.66% and now is down at 4.62%. So if it wasn't for Microsoft and Alphabet's surge on Friday, it may have been a very different picture here for U.S. equities. Now, shifting to commodities, everybody should have either the CRB index on their screen or the Bloomberg Commodity Index to get a general gauge as far as where commodities as a whole, and they can measure this commodity super cycle that we're entering here on a day-to-day and week-to-week basis. Now, we did have a little bit of a pullback on the CRB index as there was mixed energy results and also weaker precious metals. We saw crude oil futures jump 1.75% last week. Natural gas dipped 5.6%. Gold fell 2.6% and silver fell 5.6%. So big sell-off in silver and quite a big sell-off for the gold market. If you take it to the charts, you'll see though that they are currently buttoned here in a small consolidation period. Now, if you look at the Federal Reserve, we have shifted the expectations from only 1 to 2 interest rate cuts here this year, and it's going to be pushed out to the fourth quarter. This is really interesting to note because we do have a lot of economic data this week, and we do also have a Fed meeting. We'll see a barrage of economic releases. We've got everything from consumer confidence, ISM, ADP, JOLTS, at the FOMC meeting, jobless claims, factory orders, non-farm payrolls, and ISM. So it is going to be with some whipsaw action and a lot of volatility here. So keep your head on a swivel, keep those stops tight, or use put protection here if you haven't done so already. The key levels to watch on the S&P 500, about 5160 on the upside. We could see that come into the Fed meeting where they should have a bit of a hawkish tilt due to the higher inflation data, and we could see some sell-off from there. Now, if we do fall to long-term support here or weekly support on the S&P from 5050 down to about 5,000, that's where we could see a strong bounce and a good recovery here from there. Now, there's a lot of discussion overnight and the weakness in the crude oil market around some Israeli-Hamas ceasefire discussion. However, I think that'll be that the U.S. will listen to that discussion, but Israel is going to respond accordingly however they see fit. A lot of discussion about the Japanese yen falling to the lowest rate since 1990 and big trading range in the overnight session. The Bank of Japan has kept rates unchanged here since their last policy meeting, but there is still a lot of talk about their rising inflation over there. It's just a bad situation that they've got themselves into, and the hawkish narrative out of the Bank of Japan's governor has had little impact on strengthening their currencies. So what they'll most likely do is the authorities will have to come in and intervene. We do have a suggested trading strategy on that I'll be giving out to some of the clients here later today. Now, pushing on specifically to the levels in the precious metals markets. On a silver, obviously you want to see a move over 29. 29 will take it back up to 29.90. The $30 level will be defended by the bears, but if we could break through that, we could see $35. On the support side, that's very close in. Again, your two levels that I would watch on the chart, about 28.02, that was Friday's high, and then also look at that pocket support here of about 27.20 down to $27. The gold market has a very similar chart pattern where 24.04 is that upside where if we break out above there, discussion about all-time highs will be back in the cards. A lot of talk about stagflation. Some of the analysts will be brought on, and that's what they'll be citing. Now, 23.64, that was Friday's high. That's going to be your key level of resistance. We're trading about 23.52 right now, but we seem to be ping-ponging between that 23.64 down to about 23.20 to 2,300. So those are your critical levels of support. So expect traders to come in and just play those different ranges, and the ranges tighten up and coil up like a spring, and then we either blow to the upside or the downside. So if you got any questions, give me a call, 312-858-7303. We'd love to work with you over here on the futures commodity side. And if you don't like trading on the futures side, we do have a wealth management division led by my partner, Bill Baruch, who's oftentimes on the halftime show on CNBC. He can walk you through through, as everyone should have a wealth advisor and also a portfolio on that side. Give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.